JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 6th of July 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I actually want to pick up here is Nikkei 225. Just a quick update on what's happening so far. You can see yourselves that this hurdle, the one that I talked about recently, the 28,565 territory, it is doing its job and it's providing a good support. So what we need here is certainly we would need to see a break of that area in order to go for lower levels. So at the moment we're not really getting that, and well, to be honest, not only a break, we would also like to see the daily candle staying below that area, below that hurdle, in order to get a little bit more comfortable with further declines, because at the same time we would be placed below the 100-day EMA shown as the green line, and potentially more sellers could join in here. So yep, the same analysis basically remains still valid. For the upside, I'm going to take a very conservative approach and wait for a pop-up of the 29,519 territory, the highlighted area right here. I can see in chat room, Erica, good morning to you too as well. Hope you're having a wonderful start of Tuesday. So yeah, jumping into the charts now, the Shanghai Composite, and look at this one. We are now testing the lower side of the range that I spoke about previously. Now, we're not only testing it, we're also breaking it, but will it stay below it? Well, again, this is a question of time. We'll just have to wait and see. For now, I would say we still have around, what, 55 minutes left of trading here on Shanghai Composite. Let's see where it's going to end up being today. If it's going to close below this highlighted territory, it increases the chances for a further move, a further correction lower, because don't forget that we're still trading above this upside line taken from the low of the 9th of March. So in a way, this move lower could still be classed as a temporary correction here. So let's keep an eye on that one. Around here we have the 200-day EMA as well here, which could provide support, but again, let's not rush anywhere. First, let's see what it's going to do here with this highlighted territory, because as you can see right now, the bulls are trying to fight back and trying to push the index back above this highlighted territory. But again, will they be able to keep it there? Again, let's just, like I said, wait and see. Hong Kong's Hang Seng Index also is at a very tricky spot here. So we're testing the lower side of the slightly rising channel here. I spoke about that area. I spoke about that formation in my previous videos, and here you can see that with the lower side of the rising channel also kind of coincides with the 200-day EMA, and all that combination kind of did provide a good holdup. Will it be just a temporary holdup? Well, again, something that we'll have to continue monitoring. The index is still trading, also has around like 15 minutes left of something like that. But if eventually somehow we do break, let's get rid of this downside line, break this lower bound of the rising channel and then stay below it and stay below that 200-day EMA, then, well, I mean, this is where it could become a little bit more interesting for a few more sellers, guys. So keep that in mind. And the fact that actually, looking at this overall picture, you can see that that we have approached the 200-day EMA, guys, and maybe, just maybe, this could be due for a bit of a move lower here. However, again, I don't want to get ahead of myself here, but I just want to continue monitoring the situation here because it's becoming very, very interesting. I mean, every time when we kind of drifted lower, we didn't really reach the 200-day EMA and kind of reversed earlier to the upside. But now this time we kind of came already closer to this 200-day EMA. So basically this increases the chances for a possible break. But again, I don't want to rush into anything, guys. I mean, because again, I would say that as long as the lower side of the rising channel remains intact, then yes, we could still see a move back to the upside. So keep that in mind. The German index, DAX, and yeah, yesterday we declined, but then it was picked up by the bulls again, and yep, we saw this push higher, and now basically we need to continue monitoring the situation here because again, I would say it looks attractive for the bulls, don't get me wrong, but if suddenly equities and Asian equities start shifting to the downside, I mean, they might drag European equities after them, and yep, this could have that effect on the US one. But again, let's see who's gonna outpull who first of all. That's gonna be an interesting one to watch. So basically, yesterday we closed near the 15,662 territory. Right now, the cash index is trading at around 15,643 territory. So basically, we're still above this upside line, but again, came back closer to it. So again, let's see if we even will get that break. And if we do get that break, wait for that daily close, because again, you can see that this is the reason why I keep saying all the time that why we need that daily to wait for that daily close, because exactly for these reasons here, because we have these these false breakouts, which kind of are a bit of a tease here for the sellers. But again, like I said, let's be careful, guys, and let's take it seriously and let's take it carefully. Nasdaq 100. So yeah, on yesterday the market was closed, but on Friday we saw this pop as a new all-time high, creation of a new all-time high. Looking at the cash index right now, we're seeing a bit of a corrective move here to the downside, but to be honest, that's quite healthy still, because again, maybe this could give an opportunity for the bulls to step in somewhere near this upside line taken from the low, the 19th of May. But again, I would say be very careful for now, be very cautious, and if we do drift, let's say, back below the previous all-time high near the 14,582 territory, yep, we could consider maybe a bit of a corrective move here to the downside towards this upside line. But if that upside line gets broken, well, we will continue aiming for a larger correction. But again, the moment, guys, let's keep an eye on this upside line. Let's see if that's gonna play out or not. DXY, the dollar index, yeah, so after testing the downside line here, taken from the high of the 25th of September, the index started drifting lower, and to be honest, everything's fine here. I mean, I said to you previously, and yesterday actually, that in a way, if it drifts lower here and falls even below this 91.51 territory, yes, we could go for lower levels. We could go for that bit of a larger correction here to the downside, but we do have this little tentative upside line, which could also still play out. So that's why be very careful for now. I mean, and don't really kind of, let's say, panic too much that this is the kind of that's it. This was the top for US dollar. No, I mean this might just be the beginning of something. Maybe this will drift lower, find support somewhere around here, and then yep, the bulls will start jumping in again and driving this one higher. But again, let's not get ahead of ourselves. Let's just go step by step. For now, basically for the downside in the near term, what I'm looking here for is a drop below the 91.51 territory right here. For the upside, well, I'll take a very, very conservative approach, and yep, I will kind of keep an eye here on this barrier. The actually not only this, I'll keep an eye on the yep, there we go, this one right here, the current highest point of July near the 92.74 territory. And then yes, a nice good break above that would confirm a forthcoming higher high and potentially open the door to its higher levels. Now jumping into gold, and gold is enjoying the weaker dollar moment here, so we're seeing that nice correction here to the upside. We've managed to reach the area, the 1800 level, and managed to overcome it. We managed to reach the 200-day EMA, so now the big question here is, can we see a bit of a retracement back down? But again, depending on the dollar, of course, as well. If the dollar starts declining heavily, then maybe we could see a nice up move here. But at the moment, we do have these obstacles, especially these EMAs. Yeah, together with the downside resistance line taken from the high of the 7th of August of 2020. So we have all these obstacles here. So if these somehow manage to provide resistance, then yes, another drop lower could be possible. But if we break the downside line, then yes, we'll aim for some higher levels, of course. Silver is pushing nicely to the upside, so everything's according to the plan right now. But yeah, now we need to see if this upside line taken from the low of the 18th of March of last year will provide resistance, because will we test it from underneath and then go down again? Something that we need to keep an eye on. We are at a very interesting spot right now, but so that's why I would say that be a bit careful here. If we break this upside line and push back above it, then yes, we will start looking at some higher levels, potentially aiming for this downside resistance line taken from the high of the 18th of May of 2021, and then we'll take it from there. U.S. oil, WTI oil, so of course continues to rally, and you probably know why. I mean, yesterday the OPEC meeting, the Friday's delayed OPEC meeting got delayed again into Monday, and then they they decided to postpone until kind of further notice the next meeting. So basically, they still have remained with the same output, with the same production levels, kind of, and that's of course fueling the price of oil, because in a way initially the proposal was to increase the production, but yep, UAE decided not to support that. So it has its own reasons, of course. You can have a read about that as well. And so yeah, in our report, I mean, which was coming out in about an hour and a half. But yeah, guys, I mean, at the moment with oil, I mean, it seems that it will continue rising. Not much has changed. So for now, basically looking at this picture, you can see that first of all we have reached almost have reached the 76.8890 territory. I spoke about that level, and just a quick reminder what that level was. That's the highest point of 2018. So this is where we are at right now, and of course, will it go further? Will it go further north? We'll just have to wait and see. But now, basically, the next target. This is where I need to find if, by any chance, we overcome the 76.90 territory. Well, then my next target here, I need to go back into 2014 or 15 even. So let me just double check very quickly. So, okay. There we go. This little peak here, this little obstacle here, the 77.80 territory, marked by the high of the 21st of November of 2014, guys. Slightly above that, we do have another potential obstacle, which is this one right here, the high of the 10th of November of 2014. So yeah, basically for now, I mean, these are going to be my next levels, and this is what I'm going to keep an eye on if the 76.90 territory gets violated and we see a further push above it. So yeah, guys, for now, let's be very careful with that, and let's see how all this is gonna play out here for oil. But at the moment, it's looking quite positive here. Of course, maybe if you're not a huge fan of paying a little bit more at the petrol stations, then yep, that's not something that you will be very happy about. But anyway, guys, it is how it is. That's the market. We can only follow it. Well, for now. Litecoin. Litecoin is trading below this downside resistance line taken from the high of the 20th of May. So, yep, let's see if we can get a breakthrough that one, because as you can see, we are very, very close to this line. If we can break this, then yes, of course, we could aim for some higher levels. But if we continue to struggle, yes, we could see some moves lower. But I would prefer to wait for a drop below the 118.50 territory right here, which, as you can see, continues to act as a good area of support. If we clear that level, then yes, we could aim for further declines, and we could aim for that 95.47 level, and then of course we'll take it from there. Now, jumping into a few pairs, AUD/USD. Of course, the main event this morning was the RBA meeting minutes. Sorry, not the meeting. Meeting interest rate decision. So, yep. Of course, as expected, the Bank of America kept the interest rate the same. I mean, they were a little bit more positive. They sounded a bit more positive, as they were saying that the RBA was saying that basically the Australian economy is recovering a bit faster as they initially expected. So that's a good sign. And yep, we can see some positivity here kicking in the Australian dollar against some of its major counterparts, especially the US dollar here, for example. And yep, we are seeing a nice good push higher. And to be honest, I will continue targeting the upside, and especially if it remains above that 21-day EMA. But I will target the upside only in the near term, because we have to be wary of some of these downside lines here. So although tentative, of course, but they might become not tentative in the end. So we need to consider those, and we need to keep that in mind. So for now, let's keep an eye on the 0.7617 territory. Also keep your eyes on the 21-day EMA. If we continue to trade above it, then yes, I'll aim for slightly higher levels. Similar story with AUD/CHF. We broke the downside line here, taken from the high of the 18th of March. I spoke about this pair yesterday and last week, and basically, yes, we managed to break that downside line, but still we need that push above the 0.6981 territory. Yes, we had that pop. Again, we'll just wait for now. We need to see the daily candle the body of the daily candle remaining above this area, above this territory, in order not to just get a false breakout. So for now, I will continue aiming higher, but I'll get even more comfortable with the upside if we see the daily candle staying above the 0.6981 zone. USD/JPY very quickly on this one. So yeah, drifting lower, of course, understandable. And yeah, now we're approaching this 21-day EMA together with the upside support line taken from the low, the 6th of January of this year, of course. And I talked about this idea. I said that even if we drop below the 111 territory, there is still a possibility for the bulls to step in somewhere near this upside line, and if they do, then yes, of course, we could see a nice good push higher. but if we start breaking this upside line and we fall below the 110.42 territory, now that's where I will start looking at some lower levels. Now USD CAD, slightly different picture here. I mean, we see strengthening US, in general, strengthening oil, and yep, we're seeing the Canadian dollar kind of strengthening as well, especially against the US dollar, which is currently on the weaker side. So that's the little effect that we're having here. Now, the little technical issue here is that although I'm leaning a little bit more towards the downside, we are still above this downside resistance line taken from the high of the 19th of March of 2020. So what I'm going to do here right now is I'm going to take a very conservative approach, because what I want to see if we're not actually going to get something like this here. So because although everybody expects oil to continue rallying right now, we might see maybe some sort of a setback at some point, just a small correction, and yep, that's why, I mean, you should always have that element of the doubt in you, because again, at the moment it seems pretty straightforward, and as we know in the markets, not everything is pretty straightforward. So I'm not saying to go just against the trend, no, but if suddenly we start seeing signals, let's say for example in this situation, if we see USD CAD drifting a little bit lower, testing the downside line, but then rebounding from somewhere around here, then well, we could see maybe a nice good push back to the upside. But again, at the moment, guys, we'll just have to take it as it is, and yep, we will have to just wait for a break of this upside line, the short-term upside support line taken from the low the 1st of June, in order to go for lower levels. Yep, like I said, that's the kind of difficult situation right now here. So I would say keep your eyes on the 21-day EMA, keep your eyes on the downside line together with the upside line. If all this provides good support, then we might see a nice rebound. If not, then well, this is where it could turn out to be very interesting for a few more sellers. GBP Aussie, very quick update. So we managed to reach, while we were talking here, we managed to reach this upside line, or actually came very close to it. And it's a tentative one, don't get me wrong, but nevertheless, I'm still keeping an eye on it. This one's drawn from the low of the 14th of May, and yeah, so for now, I mean, the big question here is, can we see a rebound? Well, that's one of the things that I'm going to keep an eye on, but if we do see that rebound, still I would prefer to see a nice good push above the 1.8397 territory, somewhere approximately around here, just to be a little bit more on the safe side with the upside. If we see a break of this upside line and we see the daily candle staying somewhere below the 1.8262 territory marked by the low of the 25th of June, now that's where it could become very interesting for, again, I'm repeating myself, I'm repeating the same phrases, that it's going to be very interesting for a few more sellers, guys. Like I said, and then we could see a bit of a larger correction here to the downside in that case, because don't get me wrong, I mean, we're still trading above this upside line taken from the low of the 7th of January, so any move lower up until here could still be seen as a temporary correction, so keep that in mind. Now, euro against the Russian ruble. I do like to look at these exotic pairs sometimes, because they tend to be very technical sometimes. So so in this situation here, for example, we see the euro against the Russian ruble recovering and currently getting stuck in somewhat of a little range here, I would say. So something like this, basically. This little consolidation area here. We're still below all of the EMA, so there is still a chance to move lower. We're still below this little short-term tentative downside resistance line taken from the high of the 21st of April. So in a way, I mean, this all could still roll over here and move to the downside. So that's why it's a very tricky point here. And also keep your eyes on the oil, of course. If oil continues to rally, then, well, I mean, we could see this pair reversing back down nicely. So we could see the Russian ruble strengthening But if oil takes a bit of a U-turn to the downside, then, well, I mean, maybe we could see this downside line getting broken. But again, that's why I'm not rushing into anything. I'm just kind of preparing you and just kind of throwing this one out there if you're interested. The moment it is how it is. We need to kind of keep an eye on some of these technical signs, and if we do break this downside line, then my next target is this one right here, the 88.21 territory, or 22 approximately around here, marked by the low of the 31st of March, and that is near the 200-day EMA as well. And finally, EURUSD, guys. So yep, very quickly on this, nice beautiful move back up. This didn't really quite, or actually, it kind of worked out and not. So basically, the idea was that what I said before, and I kept saying that we need that daily candle to stay below the 1.1847 territory in order to aim lower. We got a few moves here to the downside, but as you can see, eventually we didn't really get that. Daily candle to remain below the 1.1847 zone, and for now I would say yes, this is kind of the exact thing that I was saying, that we didn't get the daily candle remaining below it. So that's why, I mean, we're not really getting comfortable with the downside. Although I'm not saying that we're now very positive or something. No, I mean, we're just going to slowly aim higher if the pair stays above the 1.1878, 77 territory, somewhere around here. Then yes, we will aim for a bit of upside here, and we will aim for this 200-day EMA, and then we'll take it from there. We'll see what it wants to do after, because there maybe we could see a test of the lower side of the falling channel that I kind of mentioned previously, because it would be quite interesting to see actually if we would see some resistance somewhere around here, and then of course we'll take it from there. But at the moment we can aim higher if we continue to see the pair trading above the 1.1877 territory, somewhere around here. So guys, that's it for this session, and thank you very much for watching and listening. I'll have to wrap it up here. So yep, we really appreciate your time, guys, your views, your likes, your comments. I really do. So I hope you have a fantastic trading day today. Stay safe, have your stop losses in place, and everything will be fine. Join me tomorrow morning as always at my Traders Espresso, 6 o'clock GMT time. Bye bye.